I've been practicing the infinite banking concepts for probably about 10 years, maybe even a little bit longer. And in that time, I will tell you, I've learned a ton. I've made tons of mistakes. I've gone back to the old way of doing things. I've had lots of wins, and I've discovered how powerful this concept can be when you actually use it. I've even explored into areas that I've never, ever thought about using the infinite banking concepts for. Things that were never thought about by the late R. Nelson Nash. All because I truly believe in taking back control of your money. If you're brand new to the infinite banking concepts and the idea of becoming your own bank, which involves a specially designed and engineered whole life insurance policy to make it ultimately efficient, but you don't have to use it. What you would normally do is you would replace the bank account or wherever your money starts with a specially designed and engineered whole life. And then what you would do is you would then use the money from the whole life. I want you to think about it this way. I just want to pause real quick, and I want you to think about it like this. Think of a circle. It's very easy to conceptualize a circle in your head. Normally, money starts in a bank account. Now, yours might be a bit different, but just starts in a checking or savings account. Then you take money from that checking and savings, and you would then service the loans that you've taken out in your life, or you would buy the things that you want to buy in your life. Just call it cars or boats or houses or investing in real estate or investing in the markets. Then what do you do with the gains from those things that you invested in? Well, you take the gains, the interest or whatever the profits are, and you put them back into the bank account. So just think about that. All money starts in the bank account, flows over to whatever your investment is or wherever that money is going to go to work. Then whatever that money earns goes back into the bank account, repeats. You all understand that. That's what you do today. Who wins in that equation? Well, you win once if your money is invested, makes money, right? But doesn't the bank also win? Of course it does. Because the bank has your money and takes your money and makes it go to work and makes a spread. So the infinite banking concepts, the reason we use a specially designed whole life is because that allows your money to keep working for you. What do I mean by that? Well, let's go back to the bank account. So let's just pause from the whole life, go back to the bank account. In the bank account, what happens when you take a withdrawal from the bank account? Does the bank keep paying you interest on the money that you took out? No. Now reverse that. Now start and change one thing, and that's where that money started. It no longer is in a bank account, it's in a specially designed whole life. Then when we take the money out of the specially designed whole life, we take it out as a loan. The insurance company loans us money from their general account, reduces it from our death benefit, but all of our money stays in that whole life, earning guaranteed interest and dividends. Now it earns money over in the investments, just like it did before. The money it earns in investments then gets put back into the whole life because we replaced the bank account with the whole life. But you see, the whole life never stopped earning uninterrupted compounding interest, and every time you took the interest or whatever the profits were from whatever you invested in or bought, that money then reduces the loan. Now, if the insurance company is charging you an interest rate, a simple interest rate on the loan that you took from them, but your money that is inside the whole life's cash value is still earning interest and dividends uninterrupted because you didn't use your money, you used the insurance company's money. All we would need to do is then do some simple math. Am I making more than what the insurance company is charging me? And if the answer is yes, you're making a spread. And then what I invest in makes money, and now I'm making money twice on the same dollar. But see, it gets better because every dollar you put back into the whole life, the bottom part of the circle, the profits or the interest going back in, is reducing the loan. So now you're paying an interest rate, the same simple interest rate on that loan on a declining balance, which means you're paying the insurance company less and less and less. It's an APR, okay? Annual percentage yield that you pay the insurance company is going down because the balance is being paid down. But now your money that you're earning is going up. You see, one is going up and one is going down. Now, whether or not you understand that, that is the sole reason why we use specially designed whole life. So stop arguing about the machine we use and start understanding why we use the machine. It's because of its efficiency. Because it's the only vehicle that you can use that allows your money to earn while you use it to earn again. Went down a rabbit hole there, but let's keep it really simple. You pay premium deposits into the policy builds cash value, and then you borrow from yourself to fund your life, your business, your investments, the things that you buy that you would normally use a bank, while you still earn uninterrupted compounding interest. You stay in control of your money. You're fully in control. The banks are out of the equation. And every single dollar works harder because it's moving. So if you're brand new here, the infinite banking concepts, let's just keep this simple. It's an idea of you becoming your own bank. And what you're going to do is you're going to replace a bank account with a specially designed and engineered whole life insurance policy. You're going to make premium deposits into the policy, and that policy is going to build cash value. And then you're going to borrow from yourself, from the policy, to fund your life, your business, the things that you would normally buy, the investments you'd normally invest in, while you still earn uninterrupted compounding interest. You see, you stay in control of your money. The banks are out of the equation, and every dollar of your money works harder because your dollars are moving. Now, I thought this would be the easiest way to do it. Let me just show you what it looks like in real life. But before I do that, let's pause. I need to ask you to hit that little subscribe button right there. Click that subscribe button. Now, right up above the subscribe button, there's a little bell. What I want you to do is I want you to smash that little bell. See, it's up here in the corner. Just smash that thing. That will notify you every time we put out new content. So let me just show you some of the things that I've used the infinite banking concept for in real life. So here are 7 things I have personally used my policy for. Number 1, I've used my policies to fund real estate flips. I've used my policies to start businesses, to fund the seed money to start my businesses. I've used it to cover unexpected work emergencies. I've used it to buy lots of cars, and I never ever have to deal with a bank. The only thing I do with the bank is I ask the bank what the going rate is, and that's what I charge myself from my bank. I've used it to purchase office equipment like copy machines and scanners and other supplies. I've used the heck out of it to lend money, do private lending on real estate, and make really great interest rate with a secured position. I've used it to handle unexpected life events very quickly without stressing out about where money's going to come from. And best of all, every single time I've used it for those things, my policy kept growing. It kept earning uninterrupted compounding interest. You see, the more I use the infinite banking concepts, the more I learn, the more I get to experiment. And here are 10 lessons that have changed the way that I think about money. You see, it gets easier the more you use it, and it gets fun over time. It gets more fun the more and more I use this because I'm never losing. The returns are exponential, and the more I use the system, it forces you, literally forces you to think differently, to think like an investor, not a consumer. You've only been taught to be a consumer, and same here. I've just learned and unlearned. You see, it builds networking opportunities, and it builds financial conversations. Just think about it. Like, you start in a conversation with someone, they ask you what you do. This happens all the time. I tell them I help people take back control of their money by teaching them how to be the bank. Wow, what does that mean? Well, let me give you an example. Like this car that I just pulled up in. Do you realize I get every dollar back for that car? And I do it because I changed one thing and added one step in my life. That's how I start conversations. Is that not interesting? People want to know about that. See, that's just experimenting. And that starts with conversating. And that starts with networking. And that brings on additional conversations. And I learn what they're doing. And I'm like, hey, you should try this. You see, it's not just for me. It's for my family. It's for future generations. It teaches my daughter a mindset. How many times does my daughter say, be your own bank? And every single dollar that my family has a job. There is no lazy money. My money isn't just sitting in somebody else's account. My money's working for me. You see, I've stopped relying on traditional banks. Now, the only thing I still use a traditional bank for is a home equity line of credit on my house, because that gives me the equity. Because even with my own private bank, I can't create equity in my house. So that is the only thing I use banks for. And I still use a bank account, many bank accounts, to run money through. But you realize this? I don't leave much money in the bank. I don't want the banks holding on to my money, and you shouldn't either, because that means you're not in control of it. That means your money's not working for you. And some of you are like, oh, but Chris, I'm making a high interest rate and a high yield savings. Great, until Jerome Powell and the Fed decide to drop interest rates, and then you're not making interest anymore. You see, you can either be proactive or you can be reactive. You can wait for the moment to come where you actually have to go quick and, oh my God, I got to do something about this. Or you can just be proactive about it. And here's one of the most important things. I make decisions with confidence. I take my time, and there's a lot less fear. I'm never rushing into things. I'm ready for emergencies. I don't panic. If things go bad, the market takes a dump, which wouldn't matter to me, but whatever, I don't panic. I'm in control. And now when I look at my debt And the interest that I'm paying, I know it's all coming back to me for every single loan I have out there because they're all from my private bank. And now I see debt and the interest I pay in a completely different lens. They're assets to me. I've turned liabilities into assets. And if you're sitting there being like, that sounds really good. That sounds really fun. Like, how do I go about doing this? This is powerful. Well, here you go. Here's how you put it in play. There's a 90-minute video that I'll put up at the end of this video, but we've created MSTV, Money School TV. It's a place where you can go deeper and learn about everything infinite banking. I've created the most robust infinite banking training ever created. It literally takes you from the mindset all the way to the most advanced things. In there, you're going to have active and live mentorship. There's coachings, there's trainings. It's literally the most robust place. Think of it as a TV station, but it's all money, all day, every day. And it's $19 a month, $190 for the entire year. You get an audiobook of the Private Money Guide, one of my books. You get all my books, as a matter of fact. And you can try today for free that you could be doing. And here's the other thing. You can start today free. You can do a free trial. You can cancel anytime if you don't like it. So why not? All right. But let's be real. There are a few things I wish I had done differently when I got into this and when I got started. So all things aside, all things IBC, let's put them away. You know what I didn't do? I didn't have a solid tax plan. I didn't have somebody that was doing tax planning, and that cost me, I hate to say this, but millions of dollars. But now I found really good tax planners. I found good tax attorneys, and I share them. They come on MSTV all the time. So I would say one thing, if you want to learn from me, get that in place before you actually need it. That's one thing I wish I had done. The second thing I wish I had done sooner is I waited way too long to set up the proper trust structure. I got some bad advice there too. I was told to set up a trust structure one way, and that wasn't the right way, and I got a tax attorney who then unwound that and set it up the proper way. And the third thing that I wish I had done way earlier is private lending. I have done phenomenal with private lending. It has been one of my favorite things to do, but I wish I would have learned it way earlier. But everybody always scared me about it. Oh, it's so risky. Oh, it's this. It's not. It's just something new that you have to learn, and you have to learn how to do the due diligence. It's far less risky than the other investments I used to do in Wall Street. That is something I definitely wish I did earlier. So if I could go back in time, I certainly would have taken these steps sooner, which would have multiplied the impact, should have multiplied my money sooner, and would have put me in a better financial position than I'm in. Just like many of you know, that are doing this, you say, oh, I wish I would have started earlier. So do I. Now, I started a while ago, but I could have started way earlier. But when I was a financial advisor, this isn't something we taught. This isn't something we did. Heck, I would never have wanted to give up 60 to 90% of my commissions. You see, it's not just about making money. It's about taking back control of your time. Notice how I said not control of your money. That is part of it, but taking back control of your time. Your time is your single most valuable asset you'll ever have. It is the one resource you'll never be able to get back. You can always make more money, but you can never make more time. So what are we really doing? We're buying back our time with money. And making money work for us is exactly how you're going to do that. And along with taking back control of your time, you take back control of your choices because everything slows down. You take back control of your future. You see, the infinite banking concepts has changed the way I think about risk. It's changed the way I think about opportunity. It's changed the way I think about my legacy. It's taught me that I don't need permission from a bank to pursue my dreams. I'm not relying on the banks, and you don't either. So if this is something that resonates with you, don't just sit there. Don't let it just sit in your head. Take a step. One small action step can shift the entire trajectory of your whole life. So watch this video that I'm going to put up at the end. And when you do that, book a call with us. Let's talk about your situation. Let's talk about your challenges. Let's talk about what you've been taught and try to figure out how you can solve your problem. It's not just about building your own private banking system. It's about building a life you actually own. So with that being said, folks, if you've liked this video, you're going to want to check this video out right here, The Secrets of the Wealthy, teaching you exactly how you can be your own bank.